Hello, my dear students. I am S.M. Patil, HOD and Assistant Professor, Department of Commerce, PFGC, Mangoli. Today we will discuss about the accounting concepts, very basic of account. So even in PUC first year, second year, you will learn about the accounting concepts. Today we are focusing on Bcom second semester accounting theory. So in accounting theory, in third and fourth chapter, we have accounting concepts and conventions. So we'll discuss about that. So, behind accounting concept, first we need to understand the gap, generally accepted accounting principle. So, what do you mean by gap here? In order to bring the uniformity and consistency among the accounting records, certain principles and rules have been developed and are widely accepted by the accounting profession. Such accounting principles are called as a gap, generally accepted accounting principles. So in GAP, we have two classification, that is one is accounting concepts and another one is accounting conventions. In today's class, we will discuss about the accounting concepts. So coming to the introduction and meaning part of the accounting concepts. So accounting concepts are the fundamental ideas or basic assumptions. So accounting concepts are the broad working rules of the accounting practice. They are developed over a period of time in response to changing business environment. They are developed and accepted by the accounting profession. Every business must adopt these assumptions known as pillars upon which the sound structure of accounting stands. So it means when you look at the broader picture of the accounting, that broader picture is nothing but accounting concepts. Within that, the accountant has to work. Within that, we need to work. So it is the framework in which we are going to practice the accounting. So ಇಲ್ಲಿ accounting ಕಾನ್ಸೆಪ್ಟ್ಸ್ ಅಂದ್ರೆ ಏನಿದು ಒಂದು ಬೇಸಿಕ್ ಐಡಿಯಾಸ್, ಫಂಡಮೆಂಟಲ್ ಐಡಿಯಾಸ್ ಅಂತ ಹೇಳಿ ನಾವು ಕರಿತೀವಿ. ಅಕೌಂಟ್ ಅಂದ್ರೆ ಯಾವ ರೀತಿ ಇರಬೇಕು. ಸೊ ಇದು ಅಕೌಂಟಿಂಗ್ ಕಾನ್ಸೆಪ್ಟ್ಸ್ ನ ಡೆವಲಪ್ಮೆಂಟ್ ಮಾಡೋ ಉದ್ದೇಶ ಅಂತಾರೆ, ಯಾವ ಉದ್ದೇಶ ಇಟ್ಕೊಂಡು ನಾವು ಇದನ್ನ ಡೆವಲಪ್ ಮಾಡ್ತಾ ಇದೀವಿ ಅಂತ, ಟು ಬ್ರಿಂಗ್ ದಿ ಯೂನಿಫಾರ್ಮಿಟಿ ಅಂಡ್ ಬ್ರಿಂಗ್ ದಿ ಕನ್ಸಿಸ್ಟೆನ್ಸಿ. ಸೊ ಇಲ್ಲಿ ನಾವು ವ್ಯವಹಾರಗಳನ್ನ ಒಂದು ಫರ್ಮ್ ಅನ್ನ ಮತ್ತೊಂದು ಫರ್ಮ್ ಜೊತೆ ಕಂಪ್ಯಾರಿಸನ್ ಅನ್ನ ಮಾಡ್ಬೇಕಾಗ್ತದ, ಮತ್ತು ನಮ್ಮ ವ್ಯವಹಾರ ಯಾವ ರೀತಿ ಗ್ರೋತ್ ಆಗೋದನ್ನ ತಿಳ್ಕೊಬೇಕಾಗ್ತದ. ಸೊ ಅದ್ರ ಸಲುವಾಗಿ ಕಂಪ್ಯಾರಿಸನ್ ನಮ್ಗೆ ಸರಳ ಆಗ್ಬೇಕು ಅಂತಂದ್ರೆ ನಾವು ಅಕೌಂಟ್ಸ್ ಗಳನ್ನ ಮೇಂಟೈನ್ ಮಾಡುವಂತ ರೀತಿ ಮತ್ತೊಬ್ರು ಅಕೌಂಟ್ಸ್ ಗಳನ್ನ ಮೇಂಟೈನ್ ಮಾಡೋ ರೀತಿ ಒಂದೇ ಆಗಿರ್ಬೇಕು. ಅವಾಗ ಮಾತ್ರ ನಮ್ಗೆ ಏನ್ ಮಾಡಕ್ಕಾಗ್ತದ, ಕಂಪ್ಯಾರಿಸನ್ ಅನ್ನ ಮಾಡಕ್ಕಾಗ್ತದ. ಸೊ ಇಬ್ರು ಕಂಪ್ಯಾರಿಸನ್ ಮಾಡ್ಬೇಕು ಅಂತಂದ್ರೆ ಇಬ್ರು ಒಂದೇ ರೀತಿಯಾಗಿ ನಾವು ಅಕೌಂಟಿಂಗ್ ರೆಕಾರ್ಡ್ಸ್ ಅನ್ನ ಮೇಂಟೈನ್ ಮಾಡ್ಬೇಕಾಗ್ತದ. ಸೊ ಅದಕ್ಕೆ ಎಲ್ಲರೂ ಯೂನಿಫಾರ್ಮ್ ಆಗಿ ನಾವು ಅಕೌಂಟಿಂಗ್ ರೆಕಾರ್ಡ್ಸ್ ನ ಮೇಂಟೈನ್ ಮಾಡ್ಬೇಕಂತ ಹೇಳಿ ಒಂದು ಬ್ರಾಡರ್ ಫ್ರೇಮ್ ವರ್ಕ್ ಇಟ್ಕೊಂಡಾಕ್ರ ಈ ಒಂದು ಬೇಸಿಕ್ ಅಸಂಪ್ಷನ್ ಗಳನ್ನ ನಾವು ತರ್ತೀವಿ. ಯಾವ ರೀತಿ ಮನೆ ಕಟ್ಟಬೇಕಾದ್ರೆ ತಳಪಾಯ ಹಾಕ್ತೇವೆ, when we are constructing the house, the foundation is very important. ಸೊ ಅದೇ ರೀತಿಯಲ್ಲಿ ಏನಾಗುತ್ತಾ, ಫೌಂಡೇಶನ್ ರೀತಿಯಲ್ಲಿ ಅಕೌಂಟಿಂಗ್ ಕಾನ್ಸೆಪ್ಟ್ಸ್ ಗಳು ಮತ್ತು ಕನ್ವೆನ್ಷನ್ಸ್ ಗಳು ವರ್ಕ್ ಆಗ್ತಾವು. ಸೊ ಇಲ್ಲಿ ಅಕೌಂಟಿಂಗ್ ಕಾನ್ಸೆಪ್ಟ್ಸ್ ಗಳು ಯಾವ ರೀತಿ ವರ್ಕ್ ಆಗ್ತಾವು ಅಂತಂತ ನೋಡೋದಾದ್ರೆ, ಸೊ ಇವು ಪಿಲ್ಲರ್ಸ್ ರೀತಿಯಲ್ಲಿ ಇಲ್ಲಿ ವರ್ಕ್ ಆಗ್ತಾವು. ಸೊ ಇದನ್ನ ಯಾರು ಡೆವಲಪ್ಮೆಂಟ್ ಮಾಡಿದ್ದು ಅಂದ್ರೆ ಅಕೌಂಟಿಂಗ್ ಪ್ರೊಫೆಷನ್ ಅಲ್ಲಿ ಏನಾಗಿದ್ವು, ಡೆವಲಪ್ಮೆಂಟ್ ಮಾಡಿದ್ದು. ಅಕೌಂಟೆಂಟ್ಸ್ ಗಳನ್ನ ಏನ್ ಮಾಡಿದ್ರು, ಅದನ್ನ ಡೆವಲಪ್ಮೆಂಟ್ ಮಾಡಿದ್ರು. ಅವರೇ ಇದನ್ನ ಏನ್ ಮಾಡಿದ್ರು, ವೈಡ್ಲಿ ಎಕ್ಸೆಪ್ಟ್ ಅನ್ನ ಮಾಡ್ಕೊಂಡಿದ್ದು. ಸೊ ಇದೇ ರೀತಿ ನಮ್ಮ ವ್ಯವಹಾರಗಳು ಇದ್ರ ಮೇಲೆ ಏನಾಗ್ತಾವು, ರೆಕಾರ್ಡ್ ಆಗ್ತಾವು. ಸೊ ಯಾವ ಯಾವ ಕಾನ್ಸೆಪ್ಟ್ಸ್ ಗಳು ಬರ್ತಾವೆ ಇಲ್ಲಿ, ಬಿಸಿನೆಸ್ ಎಂಟಿಟಿ ಕಾನ್ಸೆಪ್ಟ್, ಮನಿ ಮೆಜರ್ಮೆಂಟ್ ಕಾನ್ಸೆಪ್ಟ್, ಗೋಯಿಂಗ್ ಕನ್ಸರ್ನ್ ಕಾನ್ಸೆಪ್ಟ್, ಕಾಸ್ಟ್ ಕಾನ್ಸೆಪ್ಟ್, ಡ್ಯುಯಲ್ ಆಸ್ಪೆಕ್ಟ್ ಕಾನ್ಸೆಪ್ಟ್, ಅಕೌಂಟಿಂಗ್ ಪೀರಿಯಡ್ ಕಾನ್ಸೆಪ್ಟ್, ರಿಯಲೈಸೇಷನ್ ಕಾನ್ಸೆಪ್ಟ್, ಮ್ಯಾಚಿಂಗ್ ಕಾನ್ಸೆಪ್ಟ್, accrual concept, and last one objective evidence concept. So these are the 10 important accounting concepts that we are going to discuss. The first concept is business entity concept. So this concept is also called as a separate entity concept. ಈ ಕಾನ್ಸೆಪ್ಟ್ ಇನ್ನೊಂದು ಹೆಸರನ್ನು ಕರಿತೀವಿ ನಾವು ಸೆಪರೇಟ್ ಎಂಟಿಟಿ ಕಾನ್ಸೆಪ್ಟ್ ಆರ್ ಅಕೌಂಟಿಂಗ್ ಎಂಟಿಟಿ ಕಾನ್ಸೆಪ್ಟ್ ಅಂತಾನು ಕೂಡ ನಾವು ಕರಿತೀವಿ. ಸೊ ಇಲ್ಲಿರ ಅರ್ಥ ಏನು, ಬಿಸ್ನೆಸ್ ಎಂಟಿಟಿ ಕಾನ್ಸೆಪ್ಟ್ ಅರ್ಥ ಏನಂದ್ರೆ, ಇನ್ ಅಕೌಂಟಿಂಗ್ ಎವರಿ ಬಿಸ್ನೆಸ್ ಅಂಡರ್ಟೇಕಿಂಗ್ ವೆದರ್ ಇಟ್ ಇಸ್ ಅ ಜಾಯಿಂಟ್ ಸ್ಟಾಕ್ ಕಂಪನಿ ಆರ್ ಅ ಪಾರ್ಟ್ನರ್ಶಿಪ್ ಫರ್ಮ್ or sole trading concern is regarded as a distinct unit or entity apart from owners who own it. ಸೊ ಇಲ್ಲಿ ಅಕೌಂಟಿಂಗ್ ನಲ್ಲಿ ಏನಾಗುತ್ತೆ ಅಂತಂದ್ರೆ, ನಾವು ಏನ್ ಮಾಡ್ತೀವಿ, ಅದು ಒಂದು ಏಕ ವ್ಯಕ್ತಿ ವ್ಯಾಪಾರಿ ಸಂಸ್ಥೆ ಇರಲಿ, ಅದೊಂದು ಪಾಲುದಾರಿಕೆ ಕಂಪನಿ ಇರಲಿ, ಅಥವಾ ಒಂದು ಕೂಡು ಬಂಡವಾಳ ಸಂಸ್ಥೆ ಇರಲಿ, ಯಾವುದೇ ಇದ್ರೂ ಕೂಡ ಅದನ್ನ ಏನ್ ಮಾಡ್ತೀವಿ, ಅದರ ಮಾಲೀಕರಿಂದ, ಅದರ ಒಡೆಯರಿಂದ ಏನ್ ಮಾಡ್ತೀವಿ, ಆ ವ್ಯವಹಾರವನ್ನ ಪ್ರತ್ಯೇಕವಾಗಿ ನೋಡ್ತೀವಿ. ಈಗ ನನ್ನೊಂದು ಸೋಲ್ ಟ್ರೇಡಿಂಗ್ ಕನ್ಸರ್ನ್ ಇತ್ತು, ನನ್ನೊಂದು ಕಿರಾಣಾ ಶಾಪ್ ಇತ್ತು ಅಂತಂದ್ರೆ ಆ ಕಿರಾಣಾ ಶಾಪ್ ಬೇರೆ, ನಾನು ಬೇರೆ. ಪಾಲುಗಾರಿಕೆ ಫರ್ಮ್ ಇತ್ತು, ಎ ಬಿ ಸಿ ಪಾರ್ಟ್ನರ್ಸ್ ಇದಾರೆ, ಎಲ್ಲರೂ ಕೂಡಿ ಎ ಬಿ ಸಿ ಫರ್ಮ್ ಅಂತ ಹೇಳಿ ಓಪನ್ ಮಾಡಿದ್ರು ಅಂತಂದ್ರೆ, ಎ ಬಿ ಸಿ ಏಜೆನ್ಸಿ ಅಂತ ಹೇಳಿ ಓಪನ್ ಮಾಡಿದ್ರು ಅಂದ್ರೆ ಎ ಬಿ ಸಿ ಏಜೆನ್ಸಿ ಬೇರೆ, ಎ ಬಿ ಸಿ ಇವ್ 3 ಜನ ಪಾರ್ಟ್ನರ್ಸ್ ಬೇರೆ. ಅದೇ ರೀತಿ ಒಂದು ಯಾವ್ದೋ ಕಂಪ್ನಿಯನ್ನ ಪ್ರಾರಂಭ ಮಾಡಿದ್ರು, ಆ ಕಂಪ್ನಿ ಬೇರೆ, ಅದರ ಷೇರುದಾರರು ಬೇರೆ. ಅಕೌಂಟಿಂಗ್ ಪಾಯಿಂಟ್ ಆಫ್ ವ್ಯೂ ನಲ್ಲಿ ಇಬ್ರು ಬೇರೆ ಬೇರೆ ಅಂತ ನಾವು ಕನ್ಸಿಡರ್ ಮಾಡ್ತೀವಿ. ಬಿಸ್ನೆಸ್ ಅಂಡ್ ದಿ ಪ್ರೊಪ್ರೈಟರ್ಸ್ ಹೂ ಓನ್ ದಿ ಬಿಸ್ನೆಸ್ ಆರ್ ರಿಗಾರ್ಡೆಡ್ ಆಸ್ ಟೂ ಸೆಪರೇಟ್ ಎಂಟಿಟೀಸ್ ಕೆಪಬಲ್ ಆಫ್ ಎಂಟ್ರಿಂಗ್ ಇನ್ ಟು ಟ್ರಾನ್ಸಾಕ್ಷನ್ಸ್ ವಿತ್ ಈಚ್ ಅದರ್ಸ್. ಸೊ ಇಲ್ಲೇನು, ಅವರು ತಮ್ಮ ನಡುವೆ ವ್ಯವಹಾರವನ್ನ ಮಾಡಬಹುದು. ಇಬ್ರು ಸೆಪರೇಟ್ ಎಂಟಿಟಿ, ಇಬ್ರು ಏನಾಗಿರ್ತಾರೆ, ಎದಕ್ಕೆ ಕೆಪಬಲ್ ಆಗಿರ್ತಾರ, ತಮ್ಮ ನಡುವೆ ವ್ಯವಹಾರವನ್ನ ಮಾಡ್ಲಿಕ್ಕೆ ಅಲ್ಲಿ ಕೆಪಬಲ್ ಆಗಿರ್ತಾರ. ಸೊ ಇದೇನ್ ಹೇಳತ್ತಂತಂದ್ರೆ, ಇಲ್ಲಿ ಈ ಒಂದು ಕಾನ್ಸೆಪ್ಟ್ ಏನ್ ಹೇಳುತ್ತೆ, ಈ ಒಂದು ತತ್ವ ಏನ್ ಹೇಳುತ್ತಂತಂದ್ರೆ, ಇಲ್ಲಿ ವ್ಯವಹಾರವನ್ನ ನಾವು ಏನ್ ಮಾಡ್ತೀವಿ, ವ್ಯಾಪಾರಿಯಿಂದ ಏನ್ ಮಾಡ್ತೀವಿ, ಅದನ್ನ ಪ್ರತ್ಯೇಕವಾಗಿ ಮಾಡ್ತೀವಿ. ಅಲ್ಲಿ ಈಗ ಒಬ್ಬ ಮಾಲೀಕ ಏನ್ ಮಾಡ್ತಾನ, ಸೋಲ್ ಟ್ರೇಡಿಂಗ್ ಕನ್ಸರ್ನ್ ಅಂತ ಕನ್ಸಿಡರ್ ಮಾಡಿದೇವೆ ಅಂದ್ರೆ, ಸಪೋಸ್ ಸಚಿನ್ ಹ್ಯಾಸ್ ಸ್ಟಾರ್ಟೆಡ್ ಬಿಸ್ನೆಸ್ ವಿತ್ 10,000 ಕ್ಯಾಪಿಟಲ್. ಸೊ 10,000 ಬಂಡವಾಳವನ್ನ ಹಾಕೋದ್ರ ಮೂಲಕ ಸಚಿನ್ ಅನ್ನುವಂತ ವ್ಯಕ್ತಿ ಏನ್ ಮಾಡ್ತಾನೆ, ವ್ಯವಹಾರವನ್ನಲ್ಲಿ ಪ್ರಾರಂಭವನ್ನ ಮಾಡ್ತಾನ. ಸೊ ಈ ವ್ಯವಹಾರವನ್ನ ಪ್ರಾರಂಭ ಮಾಡಿದಾಕ್ರ 10,000 ರೂಪಾಯಿ ಏನ್ ಮಾಡ್ದವನು, ಇನ್ವೆಸ್ಟ್ ಮಾಡ್ದ, ಕ್ಯಾಪಿಟಲ್ ಅನ್ನ ಇಂಟ್ರೊಡ್ಯೂಸ್ ಮಾಡ್ದ. ಸೊ ಲೀಗಲ್ ಪಾಯಿಂಟ್ ಆಫ್ ವ್ಯೂ ನೋಡಿದ್ರೆ, ಸೊ ಇದ್ರಾಗ ಏನು ಟ್ರಾನ್ಸಾಕ್ಷನ್ಸ್ ಇಲ್ಲ, ಅವನ ವ್ಯವಹಾರದಲ್ಲಿ ಅವ ದುಡ್ಡು ಹಾಕ್ಬೋದು, ತೆಗಿಬಹುದು, ಇದ್ರಾಗ ಏನು ಎಂಟ್ರೀಸ್ ಬರಂಗಿಲ್ಲ ಅಂದ್ರೆ that will be wrong. In accounting terms, we are going to treat owner as separate, proprietor as separate, and the business as separate. Both business and businessman are two separate entities. We are worried about only business, not with the businessman. Businessman ಅದು ನಮ್ಗ ಸಂಬಂಧ ಇಲ್ಲ, ಬಿಸ್ನೆಸ್ ಎಂಟಿಟೀಸ್ ಗಳನ್ನ ಮಾತ್ರ ನಾವೇನ್ ಮಾಡ್ಬೇಕು, ಇಲ್ಲಿ ರೆಕಾರ್ಡ್ ಮಾಡಬೇಕು. ಸೊ ಹಿಯರ್ the proprietor is investing capital into the business, so that we consider it as the firm is borrowing capital from the proprietor or owner. So what we will do, we will take it as a liability, and we will show it in the liability side of the balance sheet as a capital. ಸೊ ಇಲ್ಲಿ ನಾವು ಕೇವಲ ವ್ಯವಹಾರಿ ಸಂಸ್ಥೆಯ ವ್ಯವಹಾರಗಳನ್ನು ಮಾತ್ರ ರೆಕಾರ್ಡ್ ಮಾಡಬೇಕು. ನಾವು ವ್ಯಾಪಾರಿಯ ಅಥವಾ ಬಿಸ್ನೆಸ್ ಮ್ಯಾನ್ ಅದ ನಾವು ಟ್ರಾನ್ಸಾಕ್ಷನ್ಸ್ ಗಳನ್ನ ಎಂಟ್ರಿ ಮಾಡುವಂಗಿಲ್ಲ. He may have some private affairs, he may have some private transactions, that will be not recorded in the business. So why this concept has to be followed? In order to ascertain the profit or loss and the financial position correctly, so we need to ignore the transactions of the businessman, but we need to consider the transaction of a business. So I have given the example of a capital. Similarly, drawings. If the owner for some personal use, he may withdraw some amount or some goods, some assets from the business, that will be treated as drawings, that will be treated as asset for the business, because the owner has to repay that amount to the business, or the business will deduct such amount from his capital. So we are going to treat them as a separate entities. So ಇಲ್ಲಿ ಬಿಸ್ನೆಸ್ ಮ್ಯಾನ್ ಮತ್ತು ಬಿಸ್ನೆಸ್ ಅನ್ನ ಎರಡು ಸೆಪರೇಟ್ ಎಂಟಿಟಿ ಆಗಿ ತಗೋತೀವಿ. ಬಿಸ್ನೆಸ್ ಮ್ಯಾನ್ ಮತ್ತು ಬಿಸ್ನೆಸ್ ಎರಡು ಸೆಪರೇಟ್ ಎಂಟಿಟೀಸ್, ಅವ್ರ ನಡು ವ್ಯವಹಾರ ಆದ್ರೂ ಸಹಿತ ಅದನ್ನ ಏನ್ ಮಾಡ್ತೀವಿ, ನಾವು ರೆಕಾರ್ಡ್ ಮಾಡ್ತೀವಿ. ಬಿಸ್ನೆಸ್ ಮ್ಯಾನ್ ಅದ್ದು ತನ್ನ ವೈಯಕ್ತಿಕ ಏನ್ ಅವನು ಟ್ರಾನ್ಸಾಕ್ಷನ್ಸ್ ಆಗ್ತಾವ ಅವುಗಳನ್ನ ನಾವಿಲ್ಲಿ ರೆಕಾರ್ಡ್ ಮಾಡಂಗಿಲ್ಲ. ಕೇವಲ ವ್ಯವಹಾರದಲ್ಲಿ ಏನು ಟ್ರಾನ್ಸಾಕ್ಷನ್ಸ್ ಆಗ್ತಾವ ಅವುಗಳನ್ನ ಮಾತ್ರ ನಾವು ಏನ್ ಮಾಡ್ತೀವಿ, ಇಲ್ಲಿ ರೆಕಾರ್ಡ್ ಮಾಡ್ತೀವಿ. ಹಿ ಮೇ ಹ್ಯಾವ್ ಪ್ರೈವೇಟ್ ಹೌಸ್, ಹಿ ಮೇ ಹ್ಯಾವ್ some private lending of money or receiving of money from others, but we are not going to record such transaction in the books of account. We are going to record the transactions which are influencing the business. But legal point of view nalli, legally a sole proprietor or the partner of the partnership firm are not separate from their business. Legal point of view nalli sole trading concern ಮತ್ತು ಅದರ ಓನರ್ ಇಬ್ರು ಬೇರೆ ಬೇರೆ ಅಲ್ಲ, ಇಬ್ರು ಒಂದೇ. Suppose I have started a hotel, business, say ABC hotel. So in that hotel, to run that hotel, I have borrowed loan from the bank, say 1 lakh rupees I have borrowed loan from the bank, right? But in books of account, what will show, it is the liability of the firm, so it will be recorded in the liability side of the balance sheet as a bank loan. But actually the amount is taken by me. Actually I have borrowed the loan from the bank. So when you're looking at the accounts, you cannot say that go and collect the amount from the business, go and collect the amount from the hotel itself. That will be wrong. Legally I am liable to pay that 1 lakh rupees amount, but accounting point of view, the firm will be liable to pay that amount. So this is the business entity concept, or we are also called it as a separate entity concept. Then second concept, that is money measurement concept. So in accounting, a record is made of only those transactions or events which can be measured and expressed in terms of money. Non-monetary events like retirement of manager, quality of the products, teamwork or efficiency of the workers are not recorded. It also implies that records of business transactions are to be kept in a monetary unit, not in a physical unit. It assumes that the value of money does not change from time to time. So what do you mean by that money measurement concept? We are going to record in the books of account only those transactions which can be measured in terms of money. Non-monetary events we are not going to record. Money measurements which can be expressed in rupees, which can be expressed in financial amount figures, that only can be recorded in the books of account. Say for example, purchased goods for rupees 10,000, purchased goods for rupees 10,000. So 10,000 is the measurement, we are measuring the transaction in terms of money. 10,000 is the money measurement here, so we can record the transaction here in the books of account. We are going to pass the journal entry, later we are going to post it to ledger. So what will be the journal entry here? Purchase account debit to cash account. We have purchased goods for cash, purchase account will be debited and cash account will be credited. Like that we are going to record. Suppose another transaction, another event, retirement of a manager. A manager who is very honest, who is very prompt, who is very sincere, who is doing very well, because of whom our goodwill has been increased. Such manager is retired from the business. So it is going to influence our business, it is going to affect our business, but we cannot record that event in our books of account. The quality of product has been improved. Whatever the goods we are manufacturing or producing, the quality of such goods has been improved. This is also very important event which is very helpful for the business, but we cannot express in terms of money, so we cannot record this transaction in the books of account. So only monetary items will be recorded, non-monetary items will not be recorded. ಸೊ ಮನಿ ಮೆಜರ್ಮೆಂಟ್ ಕಾನ್ಸೆಪ್ಟ್ ಅಂದ್ರೆ ಏನು? ಯಾವುದನ್ನ ಹಣದ ರೂಪದಲ್ಲಿ ವ್ಯಕ್ತಪಡಿಸಲಾಕ ಸಾಧ್ಯವಾಗ್ತದೆ ಅಂತಹ ವ್ಯವಹಾರಗಳನ್ನ ಮಾತ್ರ ನಾವು ಲೆಕ್ಕದ ಪುಸ್ತಕಗಳಲ್ಲಿ ಬರೆಯಲು ಬರುತ್ತದೆ. ಉಳಿದಂತಹ ವ್ಯವಹಾರಗಳು ಅದು ಎಷ್ಟೇ ಒಳ್ಳೆಯದಿದ್ರು, ಎಷ್ಟೇ ಇಂಪಾರ್ಟೆಂಟ್ ಇದ್ರು, ಮಹತ್ವದ ಇದ್ರು, ಅದನ್ನು ಕೂಡ ನಾವು ರೆಕಾರ್ಡ್ ಮಾಡಕ ಬರುವುದಿಲ್ಲ. ದಿಸ್ ಇಸ್ ದಿ ಫಸ್ಟ್ ಪಾಯಿಂಟ್. Then another thing, it also implies that records of business transactions are to be kept in monetary unit, not in a physical unit. So what do you mean by this one? Suppose say I have one building, I have 10 furniture, I have 2 computers, I have cash of rupees 10,000, I have stock of say 500 tons. So you cannot record such items in the balance sheet. That will be illogical. That will not be a scientific method to record like this. I have 2 computers, I have 10 furnitures, I have 2 buildings, I have cash of rupees 10. There is no common factor in these items, so you should not record it in the physical unit, you should record it in the monetary unit. Monetary units means I have computers worth rupees 50,000, I have furniture worth rupees 10,000, I have building of rupees 1 lakh, I have cash of rupees 10,000. So you can add these figures and you can make the total assets. Then you can say that my business worth is so and so. You can record like that. So for that reason, all the items should be expressed in money. You should record it in the monetary unit, not in the physical unit. And another drawback or assumption of this theory is that, so he considers that the time value of money does not change from time to time. So it will not consider the inflationary factor in accounting here. So another drawback, ignores the non-monetary events. Even though they are important, this theory ignores, this concept ignores the time value of money. So if you ignore such qualitative items in the business, so the financial statements that you are going to prepare, it may not give a complete picture of all the happening in the concerns. It may not show the true picture of the business. And another drawback, that it has assumed that the time value of money will be stable, it will not change. But in current situation, there will be a rising prices and falling values of money all over the world. That is the drawback of this concept here. Then moving to the next concept, that is going concern concept. Going concern concept. So what do you mean by that? It means that a concern will continue to operate for an indefinitely or for a fairly long period of time. There is neither the intention nor the necessary to liquidate or wind up the concern in the subsequent years. Based on this concept, annual financial statements of a concern are prepared. This concept makes distinction between the revenue expenditure and capital expenditure possible and meaningful. Assets are classified as fixed assets and current assets, and liabilities are fixed liabilities and current liabilities. It ignored non-monetary events. Accounting records do not give complete picture of all the. So money measurement concept. So sorry. So going concern concepts. Fixed assets are valued at cost prices less depreciation, and their market values or sellable values are not taken into account. Working life of the asset is taken into account while calculating the depreciation to be provided on the fixed assets every year. Outstanding expenses and incomes and prepaid expenses and advance incomes are adjusted. On this assumption, outsiders enter into long-term contracts with the firm, example debentures and long-term loans. So this concept has given birth to accounting period concepts. So we'll go one by one. So what do you mean by this concept is that when we start the business, we don't have the intention to close it for a certain period. Say I have started the business in the 2017. So I have no predetermined date to close the business. I have started the business in the 2017. I want to run this business for a longer period, say 20 years, 30 years, 40 years, like that. I am not having a intention to close that or liquidate that or wind up that business in the next coming years. So it means that so I'm going to run this business for a longer period. So I want to run this business for a longer period. So you cannot ascertain the profit or loss at the end of that or at the winding up of that business or shutting down of that business. Say I have started business in 2017, so I will run it for 20 years, 30 years, whatever the time will be there. So after 20 years, yes, I want to close this business. Let me uh, ascertain whether let me find out whether I have made profit or loss. After 20 years you cannot ascertain that. That will be very difficult, and that will be very difficult task for us to find out the profit or loss, or to ascertain the financial position of a business. So what we'll do, we are going to split that yes, we are going to split that whole life of the business. Say our business is going to for 30 years, 40 years, so we are going to split into years. We are going to split that life into years, 1 year, 2 year, like we are going to split, and every year we are going to ascertain the results of the business. So this concept has given birth to accounting period concept. So we have split the life of the business into years. So based on that, we are going to distinguish revenue expenditure and capital expenditure. So whatever the expenditures that we are going to incur, if the benefit of those expenditures will be received within a year, then it will be treated as revenue expenditure. If that benefit exceeds 1 year, say it will be for 2 years, 3 years, 5 years, 10 years, then it will be treated as a capital expenditure. So classification of revenue expenditure and capital expenditure is based on the going concern concept. Say we are paying salary to the staff, so we are paying the salary to the staff, so monthly we are going to pay the salary. So every month we are going to pay the salary, and by getting that salary, there we are going to receive the benefit. The work done by the our employees will be received in 1 month. So we are paying within 1 month, and they are also serving the business within 1 month. So it is less than 1 year, it will be treated as a revenue expenditure. Electricity bill we are paying, we are using electricity for 1 month, so we are paying the bill for 1 month. So whatever we are paying, we are receiving the benefit within a 1 year, that will be treated as a revenue expenditure. What will be the capital expenditure? Here we are paying the amount this year, but we are receiving the benefit for the longer period, say 5 years, 10 years. Say suppose I have purchased a building to run my business. So here purchase of building is capital expenditure, because here we are paying the amount in this year, but we are using that building for our business for a longer period, say 5 years, 10 years, 15 years. We are going to use that building for our business, so it will be treated as a capital expenditure, and it will be treated as asset, and it should be shown in the asset side of the balance sheet, whereas revenue expenditure will be treated as the expenditure of the current year, and it will be debited to the profit and loss account. Similarly, assets will be classified into fixed assets and current assets. So we know that fixed assets means it will be used for our business, to run our business. These are very much necessary, and we are going to use such assets for a longer period. Current assets means we are the assets which can be converted into cash, or from cash to asset within a period of 1 year. It will be treated as current assets. Similarly, we are going to classify it as fixed liabilities and current liabilities. So according to this concept, fixed assets are valued at cost prices less depreciation, and their market values or saleable values are not taken into account. According to this concept, going concern concept, we are going to run the business for a fairly longer period. So we cannot valuate the asset at the market price, because we are not intended to sell that assets for this year or the next year. So our intention is to use that asset for a longer period. So what we will do in the balance sheet, we are going to record it at the cost price of the that particular asset. We are not going to consider the market value. We are going to record it at the cost price, and whatever the depreciation has been charged, that we will deduct that, and we are going to show the value of the that particular asset. We are not going to show the market value of the fixed assets. So working life of the asset is taken into account while calculating the depreciation to be provided on the fixed assets every year. So here working life of the asset is taken into account. So if we consider the market value, it will be very difficult to calculate the depreciation. Here simply we are going to calculate the depreciation based on the working life of the asset. That will be based on this particular concept. Say I have purchased a machinery for rupees 1 lakh, and the working life of that machinery will be 10 years. I have purchased the machinery for 1 lakh, and the working life of that machinery is 10 years. So what will be the depreciation here? So 1 lakh divided by 10 years, that will be 10,000 per year. So I am going to charge 10,000 depreciation every year. That will be a very easy task. If you consider the market value, say suppose that machinery value may increase or may decrease, then it will be difficult to calculate the depreciation on that particular asset. So this is very important. So next one, outstanding expenses and incomes and prepaid expenses and advance incomes are adjusted. We are going to adjust the outstanding expenses and incomes, and prepaid expenses and advance incomes are adjusted here. On this assumption, outsiders enter into long-term contracts with the firm. The concept is that going concern concept. It means that we are going to run the business for a longer period. Based on this assumptions, debentures, we can issue the debentures to the public. Debenture holders will come with the agreement with the company based on this assumption, because the firm is going to run for a longer period. So we can invest, we can give a debt to this company. Similarly, long-term loans, banks are providing long-term loans to the companies. Based on this assumption, the company is going to run for a longer period. So this concept has given birth to accounting period concept that we will discuss in the next slide. So accounting period concept. Accounting period refers to the span or length of time at the end of which the financial statements of an enterprise are prepared to know whether it has earned profit or incurred losses during that period, and what exactly is the position of its assets and liabilities at the end of the period. The accounting period concepts means that for measuring the financial results of a business periodically, the business or working life of undertaking is split into convenient short period of time called accounting period, and profit or loss and financial position of the business are ascertained at the end of each accounting period by preparing the financial statements. In the previous slide, we have discussed about the going concern concept. The life of the business will be very longer, say 50 years, 60 years, 70 years, it may be 100 years or more than that. So we cannot ascertain the profit or loss at the end. So what we need to do, we need to split the entire life of the business into small parts, say 1 year. So we have generally accepted 1 year time frame. So in 1 year we are going to calculate the profit or loss, and we are going to prepare the balance sheet, and we will come to know the financial position of the business. So accounting period refers to the span or length of time at end of which financial statement are to be prepared. Some companies may prepare 3 months, 6 months, 9 months, 12 months. So generally we are going to adopt year concept here. So we have splitted the life of the business into years. So in that year, we are at the end of the year, we are going to prepare the financial statements, and we are going to ascertain the profit or loss, and we will come to know the financial position of that business. So when we will start the year and when we will end the year. Here, as per the accounting period concept, an accounting period may be a period of 12 months. It should be a period of 12 months, and it may be a calendar year, it may be a financial year, or it may be any year of 12 months. So if you follow the calendar year from January 1st till the 31st December, that will be considered as 1 year. Or if you are following the financial year as your accounting year, then it will be April 1st to April 1st of this year to 31st March of next year will be treated as the accounting year. Or you can follow any year of 12 months from this Deepavali to next Deepavali, from this Dasara to next Dasara. That will be treated as accounting period concept. Then coming to the next concept, that is cost concept. The cost concept means that an asset acquired by a concern is recorded in the books of account at cost. The market price of the asset is ignored, and it is its cost price that forms the basis for all subsequent accounting for that asset. Cost includes cost of acquisition, transportation cost, cost of installation, cost of cost of making the asset ready for use. So cost concept means that, so when we are going to acquire an asset, we are going to record it at the cost price. We are not going to consider it for the market price. Based on that cost price only, the subsequent accounting of that particular asset will be taken place.